With the Dow in a pretty steady uptrend, using the T-line as a support level, right now, what price or what situations do you get into if everything is probably in a big steady uptrend and well in the overbought area? This is where using candlestick charts showing patterns become a very effective method for still making good profits, not knowing which way the market's going or if the market's still continuing higher. When everything has moved higher, our fry pan bottom breakout, you can see the slow rounding bottom produced a strong signal today, or a strong trade, with the expectation it's going to go higher, which is the expectation coming out of a fry pan bottom. And during the uptrend, we saw today that crude oil prices gapped way down because of the DOHA meeting. However, after it traded down, once it came back up through this level, you would see immediately it was starting to form a green candle, which told you right away that the buyers were still there because they were buying above where it opened. That told us right away that they weren't mass selling crude oil, that they were starting to buy back in. And the gap down in crude oil prices may have gotten everybody concerned about the oil stocks trading or opening up lower, possibly selling off. However, after a minute or two, you could see that they started trading positive, as in Whiting Petroleum, showing that the buyers are still there. This makes for a very simple stop loss if you use common sense, that if they are starting to buy after gapping down, what do we expect from a gap down? Well, if the seller's in control, we definitely want to be out of the trade. So if we're sitting here watching and we see it start moving positive, very simply, we just put a sell stop right back where it opened, because if it was trading up, then all of a sudden they traded it back down through the open, that pretty much told us that the sellers were in control. Knowing what each signal and pattern represent and what the results are allows investors to get into the right place at the right time. For example, our recommendation on AKRX was based upon a left-right combo right off the 50, a J-hook pattern, a morning star signal, followed by a doji sandwich. Now, a morning star signal is a big down day, a day of indecision. The third day closes more than halfway up this candle. A left-right combo, which is also a very strong bullish signal, was a doji followed by a bullish engulfing signal. A doji sandwich is a big day, a doji, and then another big day with the doji sandwiched in between, which usually represent more upside. And we call this a McMuffin because we've got a morning star signal followed by a doji sandwich, or the morning sandwich telling us McMuffin that we've got more upside. And if we've got more upside, everybody else is watching that if they break out through this wedge formation, it's going to go much higher. So we're buying today and we'll be prepared to buy again tomorrow. This allows us to analyze what's going on in investor sentiment that works time after time. That'll be it. We'll see you in the chat rooms.